Good morning, good morning. How's everyone this morning? Everyone survived Fed Day? Pretty subdued. The last couple of Fed days have been pretty calm, pretty subdued. No huge moves. Then of course we had earnings, so we'll sift through that this week, see how it pans out. And they had fun in the overnight while I was sleeping. Look at this. So we have just corrected overnight inventory. Overnight inventory was long. Good distribution over yesterday's high. Sold off, corrected. Nice bounce from the 71.35s back to 60 and now back under 71.50. That's a level I'll be watching as we go into the week. Hey, Badir. Feeling better, getting the voice back. Man, it's been something else. I've gone to the doctors more in the last 2 months than I have pretty much my whole life. But I guess that's what happens when you get old. So 71.50, that's what we're going to be looking for. Do we stay above it? Do we get underneath it? I'm going to show you something interesting that you may find interesting. You know, if you're a tactical trader, you'll find it interesting. If you don't know what tactical trading is, come join our room. We'll teach you. No way. I'm sorry to hear that, Badir. Hope she feels better. So I'm going to throw in the, let me see here. I'm going to put in the evening sessions. And do you notice something every time, you know, every time we get down to 71.50, it bids and comes back up, bids and comes back up. So today's the last trading day of the month, okay? We need to figure out if that bid is still there, right? We've got a serious bid, around 71.35. Every time we go look below 71.50, we find buyers and we pop back up. It's like Brad at Shadow Trader says, it's like when you take a beach ball, push it onto the water, it pops back up. And that's what's been happening for, for quite some time now, ever since we climbed over it on the 24th. So, what are we going to do? What are we going to do today? Right? For longer term traders, it's a little frustrating, you know, because they can't really put a position together. If you scroll out, let me just get rid of the overnights again, right? You can see that We're in a big distribution. Here, let me just get rid of all of this. Hide short drawings. Right. Sometimes it helps to look at a clean chart. And you can clearly see we're in distribution. See that? Hey, Jerry, welcome back. Right? So there was a little stability, march up, and distribution. I'm better. I'm getting better, Jerry. Thank you for asking. So we've got this, it's almost like a perma bid here, right? And we have, hang on, let me just get this right. See that? We're in a big distribution balance, kind of larger picture, right? It might shake something loose, trade maker, but nothing's been able to shake it. Maybe tonight's Apple earnings, right? Maybe Apple will come out and say, you know, we're going to make cotton candy instead of phones, and we'll get a liquidation. I'm just joking, right? The problem with these sideways moves are that if we can't break that, say, 7120 area, right? If we can't break that, that price stability will bring in buying and will shoot up even higher. So if enough people short, you know, if enough people go and short this thing in this box, and we stay, if we stay bid above 7120, right? That people will eventually have to buy it, right? Now, why do they have to buy it? Because money gets put to work every month in this market. So come tomorrow and into next week, all that money from people's paychecks go into pension funds. They go into the market. It has to be put to work. It can't just sit in cash. So money managers will start, they'll start buying, right? They don't want to, but they have to, right? Because their clients are going to say, well, why didn't you buy at 6,700? Why didn't you buy 6,500? Right now, it's, you know, it's 100 points higher, whatever. You missed the move, right? So if we don't get a liquidation, be aware of that. For longer term, larger size traders, don't lose perspective of how the business works. Not to say that you can't short intraday, that's not a problem. Hit and run shorts, nothing wrong with that. But if you're building a short position and you're a size trader and this thing doesn't crack 7120, you know, don't turn your back on it. Okay, just saying. Right? Just saying. Now, we're in a sensitive news environment, so you could, you know, we easily could look below it and come back up like we've done. But right now, I'm not seeing really any selling. Nothing really to speak about. And look, we still have gaps, right? We have gaps that have not filled. We have a gap here. And we finally filled this one, just barely, right? This one is still unfilled. This one is unfilled. So, I mean, look at this. It helps to just look at a clean chart. You can see the positions. You can see this stuff being sold, that brought in buying, one time framing up into more distribution, right? So if you're a long-term short seller, if you're short and you're holding, and I'm not talking retail traders. We have some people who trade large prop and semi-institutional that follow us. You know, if we can't take out those lows, just be careful. Hedge yourself, manage your risk. Let's see what happens. Maybe we'll get a summer liquidation, but it's right now it's not looking good just yet. You know. No, you don't want to go long at the highs, but man, just something to look out for. So let's see if we stay over 71.50 or come back down underneath it, right? I've got my balance zones, and today I'm going to talk a little bit about edge. Okay. Most people don't think about edge at all, right? Because they have no clue what's going on in the business, unfortunately. And we don't tell people what's going on in the business, right? We kind of rob retail traders because we tell them to trade a pattern or to trade risk reward, but nobody tells them what's actually going on. What's happening in the business? Why is this happening? Why is that happening? It's important, right? That's why what we do at Trading Syndicate is we teach you, right? We teach you how to understand the business so you take intelligent trades, right? Make good business decisions, you know? Now, let me talk about edge. Okay? A lot of traders get frustrated and they'll be buying, 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 get stopped out, and then your trade works. Sound familiar? I mean, it's happened to me, so it must be happening to you. I'm getting, like yesterday, I had one of my guys, I was at the doctor, and he was like, how do I do this? How do I do that? How do I do this? How do I do that? I'm like, buddy, I'm at the doctor's. How do I do this? How do I do that? He just wouldn't stop, right? And you could tell the frustration, right? And that's because, well, number one, he doesn't listen. But to get him to listen takes like an act of God because he's always anxious to take the trade. And I understand that if you've lost money or if you're sitting there and you're not making money, it's very, very hard, right? But you need to start thinking like a business person. Does this resonate with any of you guys? You get what I'm saying? Okay. Now there's a reason why you want to wait for the edge. The edge is where you get the best discount. Okay? Right? You got to think about it like you're shopping, right? Like you're in a business and you're shopping for a deal. The edge is where you get the best deal. And you got to wait for that edge. No matter how much it drives you crazy, you got to wait for the edge. The reason is that's where you get the best deal. Now, here's the frustrating part. The frustrating part is, what if we don't get to the edge? What if the market came here and then went up? That's a piece of information. You may miss the trade, but that's okay because you're establishing where the sellers stop selling. The sellers stop selling where they see buyers, and then they try and entice them higher. They try and tease them higher by raising price. And that's why you watch the offer, right? Yeah, VWAP is where I'm getting out of trades, not getting into trades. right? And the reason is because VWAP is not a fixed reference, right? VWAP moves. Let's go take a look. See how VWAP was here. So if you try to take trades off of VWAP when it was cranking off the open, it's very difficult, right? It moves. It's not fixed. So trading off of VWAP and trying to initiate trades off of VWAP is like riding a horse and shooting, right? You know, like those old Western movies, you see the cowboy? Like if you're a stationary sniper, you can relax, take your shot. When you're riding a horse and you're trying to hit a moving target, you're moving, the target's moving. It's much harder. Does that make sense? If you guys can visualize why you do things and why you shouldn't do things, it'll really help you. Because in trading rooms, they just give you rules. They don't tell you why the rules exist. They don't tell you why the business reason or why the common sense practical reason for a trade exists, right? Does that make sense to you, a liquid? So if you're moving and the target's moving, accuracy is a lot harder, right? Get it? So if you use the fixed reference, then you can see the price action back and forth over it. So say I was positioned long, right? Say I'm positioned long here. As we move up, I will be selling before VWAP. And if I was a large trader, I'd be out of all my contracts before VWAP. Because I know that there's going to be all sorts of order flow at VWAP because that's where institutions transact, right? Nothing wrong with a couple of points. A couple of points is beautiful. Sell into strength, especially in this market, right? Because here's the thing, right? It's best to just get paid in this market. No one's getting paid. People are losing money hand over fist, right? It's very, very hard to make a buck in this market. It's very frustrating, right? So if you miss a trade, don't worry. You're missing trades you don't even know about right now, right? There are trades happening in markets that you don't even know are happening, right? So just relax. It's really going to help you guys if you relax. And it's hard to relax in a market where there's a constant stream of news. What I recommend is when you're trading, right? I posted in the room my 5 steps, right? Where you draw your balance, you look at the inventory, you draw your balance zones, you watch, then you test those balance zones or cost basis zones with the micro. If those trades work, then you size up and trade the mini. If those trades don't work, then you go and reassess, right? This way, listen, we're going to make mistakes. We're going to take losses. Let's minimize the damage to our capital by taking small losses. So when we make money and have wins, the wins actually outpace the losses. Right? So even if you have like a 60% win rate and your losses are small, you're still making money. Right? So that's something that you really, really want to be aware of. Admitting you're wrong early is one of the biggest things in trading. Waiting for an edge, admitting you're wrong, and being patient so the other traders can go Let the other traders go blow themselves up, and then you can take the trade, right? It's just easier that way for you, you know. Send them out first, right? And see what happens. Now you can see on the chart right where we are. For the last sort of hour and a half, maybe even 2 hours, there's been a seller up here at 71.60, right? You know, there's a seller. So, what's it going to take for that seller to move their price up? Well, if enough people come in and start buying, we'll get over 71.59 and a half. Would I buy this here? No, right? A nice long at 71.46 to 53 would have been nice. 53 up to, where we are now, 59 would have been nice. But this is one of those areas where you just don't want to gamble on it. Oh, hey, Flex, what's going on? So now they see how the offer is creeping up over 59.5. Here we go. There's 60. That's where the inventory was priced yesterday. So if enough people are short under 56, they'll go to buy, and the people who own it under 56 will raise price. And that's how markets work. Get it? So here we go. We're taking those stops. Let's see if we can get up here into the 63s. Right? If you draw a volume profile from the top down to the bottom, you'll see that the position is here, right? There's a position here, there's a position here. That's where the cost basis is. That's why my cost basis this morning is 46 to 53. 2 times discount is down to 33 and a half. What was our low? Low was 33 and 3/4, right? So the levels are working. There may be a tick or two off, right? So as the market creeps up, when the market moves up higher, what you want to do is you want to look for where the seller is. Let's see, where is the seller? Probably going to be around 64, 64 and a half. Now, how do I know that, right? How do I know there's going to be a seller? Right here. On the way down, the top of the candles on the way down will tell you where the sellers initiated. They were there before, right? The buyers aren't always going to be there. That's why this sometimes works on the bid, but generally not. But generally on the sell side, the reason is they are size sellers. Well, 72.30 is not out of the range of possibility given this market. You never know. We'll see. If we can get enough people short under 71.50, under 70, let me see. Right? If we can get enough people short under 7,200, 72.30 is not it's not crazy, right? If we can take out 72.10, 72.15 on the way up, it could happen, right? So you could be expecting it, but, the market's going to tell you whether you're whether it's going to happen or not. That's great. That's a great trade. Beautifully done. And if you don't want to sell into strength, if you're holding for a longer period of time, you know there's going to be sellers at 71.71, right? That's where VWAP is, right? You can see them selling into it right now at yesterday's point of control, right? So now you know where the seller is, right? Just around 71.62. So let's see now where it goes in bids. It's going to backfill. Market has gone up from 71.53 all the way up to the 60s. Now it's going back and filling in that demand with supply. Hey, on YouTube, it said Shaw, is that you, Doc? Just wondering. If it is, good to see you. Oh, he's not answering. Probably isn't then. Okay. Let's see where it backfills. Let's see if it holds this 57, 56 area, right? Because that's where they sold before. If this position is secure, it'll bid there and then do this. See? Just watch this. The top of these candles here, that's where the sellers were before. If the position is secure underneath that, it'll find some bids and creep back up. They'll stop selling. Otherwise, we'll come back down to the 71.53 area, right? So the levels work. If you're looking for a look below and fail, the best one would be here or here, right? And where you're going to get the best discount, of course, is down here, the 71.30 area. See, there are some bids here. It's just hanging. See how the candles are getting small? Now let's see where the market finds the bid. And what I'd like to see is this overnight point of control move down here somewhere. Show us some good accumulation. What's going on in the room, guys? You guys are quiet. No problem. No problem, Doc. Yeah, slowly getting better, Dave. Thanks. I tell you, I've never had a virus like this. Off to the hematologist this morning. You haven't been to sleep yet? Yeah, I don't see a trade here either. Trade maker, it's okay. I'm just chilling out with you guys. See if you guys have questions. Oh, Dave, yeah, if you want to check in with Graham, see how he's doing, I'll give him a call tomorrow if you're listening, Dave. I don't know where you are. Oh, you said you were on a bus. You're working on the chilling out part. That's good. We're both getting scans. Yes, I do have a process for mean reversion. David, what it is, it's called when sell orders finish. See, the sell orders took us down here, right? So, like, close your eyes and pretend. Let's do a little simulation while we got time, Dave. David, you call me up and you say, JJ, I want you to sell. You call me here, right? And you go, JJ, I want you to sell 2,000 contracts. And I say, what's your limit? And you go, 7130. Okay? This is how institutional trading works in the old days. So you go, sell 2,000, 7130 limit. So I start tapping it, tapping it, tapping it, tapping it, tapping it. Right? By, say, maybe 7140, I'm out of maybe 1,500 contracts. Got it? When I get down here, maybe there's 300 contracts left to complete your order. I'll buy those 300, and they'll go in my inventory. I'll call you and say, you're done, David. Right? And I give you your average price, right? Maybe it's 71.40, 71.38. Either way, you give me a 30 limit, I got you a better price. Got it? As soon as I take that inventory in, I lift the offer. Okay? So my process is actually based on fact, common sense, and how the business works. It has nothing to do with mean reversion. It has to do with the business. The orders are done. You can see the wholesalers take them in here. Why? Because they don't have to sell under 33.5. Does that make sense? That's why you buy 33, 34, 35. Put your stop here, and then you sell into the strength. Now let me tell you the process by which a low is formed. Because you don't want to be shorting down here, right? So what you do, what happens is when the sell orders hit the market, the people who come in and buy these lows are short sellers. Then wholesale traders will buy on top of them. Then we come in and buy. Now the people who shorted here, here, and here, they come in and realize, oh my God, we got to cover. When they go to cover, the people who own the supply under 44 lift the price. Does that make sense? So there is an actual series of business steps that happen that create the trade that you're taking. Now I know you're in my room, so there's a ton of videos on this. If you go into the JJ video section, I've got like literally hundreds of videos and probably about 10 of them on how a low is formed. So that's why you're trading at the edge. You're trading at the edge because you get the best deal. Does that make sense, David? Oh, that must be Doc. You're typing just like him. You get it? Okay, cool. Good. You're getting the best deal. It's based on the business. So check out those videos. And like I said yesterday, David, DM me. I got to run out a little bit this morning. I'll be at the hematologist, but I'll be back. Yeah. And if you need any help at all, just DM me in the room. I'm always around. Let's see here. When you say trade from an edge, you're referring to an extreme. Like look below and fail or look below. Yeah, exactly. Yeah, exactly. Well, having an edge is actually trading from the edge, right? Not to confuse you, but having an edge is having an established business protocol. What having an edge in trading is, you have, when the market does a certain thing, you have an established business transaction that you take, which is what we call an A plus setup that you've done over and over and over. Right? So what we want to do is we want to keep it simple. So you actually understand the business reason for taking the trade. It's not based on an indicator or a candle pattern. There's nothing wrong with indicators and candle patterns. But the problem is they don't teach you the business behind the pattern. If they told you this is what's happening, this is what's creating that pattern, then you would be able to understand it and trade it much more tactically, with more intelligence, with less risk, right? So that's what you really want to concentrate on. Once you understand the business reason for taking a trade, things will start to click. You'll stop FOMO, you'll stop revenge trading, you'll stop, well, hey, let's just try this kind of thing, right? The edge, Dave, is where you get the best deal, right? So say, Dave, you're looking at a Kenworth, right? And it's 300 grand, right? But the dealer is going out of business. He's in bankruptcy. And you can buy that Kenworth for maybe 170 grand or 150. That's your edge. Yeah, it's a big overnight range today, right? You want to get the best deal. Sometimes you don't. Sometimes it, like say for example, it had gone to, if we didn't liquidate it down to 33 and change, say we stopped liquidating at 71.40, then that's where the buyers are. Because the sellers will raise price to get them to try and pay more. I've been a seller all my life. I've sold billions of shares of stock into these markets for clients. Okay? And as soon as you see buyers, you start raising price. But as soon as people come and start competing with you to sell, then you got a lower price. Right? So here we go. Got a nice creep up. We're looking for those 64s. Well, when I look at 59.50, where's 59.50? 59.50 is right in the middle of the zone. So I really don't care. That's not an edge. David, the edge is, you see the colors? So when it goes from green to blue and back up into green, that's the trade you want. You want this. You want from blue to red back up into blue, right? And this color, when it goes from red to the next color and comes back up, you see? This is the edge of these zones. The edge is not in the middle. Does that make sense? So when the market liquidates, you look for a buy. When it goes up and comes back in, you look for a short. At 66, 66, 66. Yeah, I would look for selling here, right? Also, VWAP is here, so I know that there's going to be sellers who front run VWAP. So if there's enough buying, it'll go sideways here and then try and do this, right? There you go. Now you're cooking with gas. You got it. Nice. Okay, folks, I got to run. Thank you so much for being with me this morning. If that is you, Doc Syed, hopefully it is. Good to see you. And I hope you do well on your trades. Thanks, everyone. Take care. We'll see you at around 2:15 for the next session. Thank you, everyone. Bye for now. Have a great day.